5 seconds to the open. Ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
Well, Happy New Year, my friends, and welcome to the very first episode of the Follow the Money podcast in 2025. As you just heard, my name is Jerry Robinson, and let me just say it's great to have you here as we kick off another exciting year together. A new year, of course, is a fresh start, a clean slate, and a perfect time to refocus on what truly matters. You know, when I think about what makes a successful investor, or even a successful life for that matter, it really boils down to two things. Number one, self-discipline, right? Self-mastery. And secondly, planning. You know, these are themes that are going to guide us not just in this episode, but throughout the year. Because as you know, in today's fast-changing world, preparation and focus and self-discipline, they're everything. And I'm here to help you navigate 2025 with confidence. And so today we're going to start the year off strong with a sneak peek at our brand new 2025 market outlook. I'm going to be sharing two key economic predictions or forecasts that will likely shape the markets this year, along with three exciting investment themes that I think have the potential to outperform in 2025. But before we dive into all that, let's take care of some special business because we recently ran our big December 2024 giveaway, a free one-year gold membership here at followthemoney.com, valued at nearly $500 for the entire year. And we want to kick off today's show by announcing the winner of our big one-year gold membership giveaway. So drum roll, please. And the winner of our free gold membership giveaway is Peter F. from Toronto, Ontario. Congratulations, Peter. Welcome to the club. Peter had written in a very friendly note. He had talked about how he was a huge fan of Follow the Money. He'd listened to every one of our podcasts since 2011. And Peter actually used to be a member many years ago, as he pointed out. And he shared some of the things that he would like to hear in the future. He wanted to hear more about trading and trends in various asset classes and cryptocurrency adoption, AI opportunities, and life insurance and trusts, and all of these topics. What a wonderful note that you had sent along, Peter. And by the way, we got so many submissions from you out there listening. It was just so encouraging to see all of the folks that are around the world who were submitting in for this giveaway. I want to say thank you to everybody and all of the feedback that you sent in. There was so many great notes, so many great recommendations and suggestions, some really great feedback. So I want to thank everybody for being a part of our giveaway. We'll have another one of these very soon, so stay tuned. But your feedback and ideas that you sent in help shape this podcast and all the content that we create. So we are so grateful for this amazing community of listeners and students and members. And Peter F. from Toronto is now our newest gold member. So big congratulations to Peter. And again, thanks for everybody participating. Peter, check your inbox. You'll see that you have access now for a one-year gold membership, but you'll see all the details by email. Be sure to check it out. And great to have you aboard, Peter. If you have any questions, feel free to reach out to us. All right, now, before we look ahead, let's take a moment to reflect on the year we just finished. We just went through a very interesting year in 2024. And if you tuned into our 2024 Market Outlook episode last year at the beginning of the year, you might remember some of our bullish calls on some of the different areas we were watching. In fact, if you're going through our archives, you can go back to episode number 453. You'll find that 2024 Market Outlook podcast that we did. So we're basically making that a tradition. We're doing another podcast episode here at the beginning of the year to, lay out some of the comments that we made in our just released 2024 Economic and Market Outlook. And so that's what we're going to be focusing on today. Now, you might recall, though, in that podcast episode that we had released, we had talked about a few areas. We certainly thought Bitcoin would have a good year. Bitcoin, was up more than 100% this year. We also expected our Smart Score 11 strategy to really outperform. It did, to the tune of a 70% return for that strategy versus the S&P, which delivered around a 25% total return in 2024. So it nearly tripled. And then we also had expected small caps to rally in 2024. And the Russell 2000 did okay. It was up 10% for the year, but it failed to meet our goal of beating the S&P 500. That was a pretty big reach this year last year, because the S&P got up 25% total return, 23% when you back out dividends. That was a really great year for the S&P. So it made it pretty difficult to beat, when you have that kind of return. But it's really incredible to see. We had other things we had also mentioned in the fuller 2024 outlook that we gave to our members. But we were very impressed with the markets last year. Really good broad returns across many various asset classes. We had gold hitting record highs. That was certainly on our list. Bitcoin smashing through the 100,000 mark. And then, of course, we saw a lot of movement in the tech space and in various, industries that we like to follow. And of course, as we look back on those forecasts, from 2024, there are lessons to be learned, both from what we got right and what we could have anticipated better. And those lessons are exactly what we're using to prepare for the opportunities and challenges of 2025. So with 2024 in the rearview mirror, let's turn our attention to 2025. And what I want to do is I want to discuss two critical economic themes that I believe will define the year ahead. So let's get started. Well, as mentioned, we just recently, in fact, this week, released our brand new 2025 economic forecast and market outlook. And we delivered it to our members on our Tuesday Trends and Profits webcast. Every Tuesday at 10 a.m. Central Time, I host an hour-long webcast. It's really a training webcast for our members and students, but we use it to deliver courses. We use it. In fact, we just wrapped up our day trading course, a 30-minute breakout blueprint, which is a big success with many of our members who like to day trade. And by the way, we do have a swing trading course coming up very soon. I'll tell you about that later. That's coming up on our Tuesday calls. But on the last Tuesday of this week, we unveiled our 2025 economic forecast and 2025 market outlook. And what I want to do in this segment is I just want to talk about two of the points that we mentioned in the 2025 economic forecast. We actually mentioned about 6 different points that I think are going to have a pretty big impact on the market this year. Now, our members have access to the full 45-minute video and a PDF that they can download for both of these updates, the 2025 economic forecast and market outlook. But what I want to do is I want to share with you on this segment, as I mentioned, 2 of the 6 key economic points that I am looking at as we head into the new year. The first theme, and by the way, these big picture themes matter because understanding the forces driving the economy is absolutely essential to making smart investment decisions. The market isn't the economy. The stock market is not the economy, of course, but knowing what's going on in the economy can certainly impact, the overall market. And if you can spot the trends early, you can position yourself ahead of the pack. And that's what we're all about here at Follow the Money. So again, let's start with that first theme. And that first theme that we had mentioned was that the stubbornly elevated U.S. dollar index we expect to decline in 2025. That is, we are bearish on the U.S. dollar in 2025. And so we are expecting the dollar to weaken by anywhere between 5 and 10% this year. And there are several key factors driving this outlook. I have to admit, though, I did expect the dollar to weaken a bit more than it already has. We've actually seen some resiliency in the U.S. dollar, especially since it bottomed out near the 100 level back in September. Interestingly enough, since September, when it became clear that President-elect Donald Trump was going to win the election, it became pretty clear in the betting markets, and the market began driving the U.S. dollar up. And the reason for that has to do with the uncertainty around what a President-elect Trump is going to do. He's made obviously many, we would call them threats even, to countries regarding tariffs. And we know that, President Trump tends to do this. We know this from his first term in office, that he does tend to use threats and some bluster to get the attention of those he's wanting to get the attention of. Now, he doesn't always follow through on many of the things that he says. Sometimes he just uses the rhetoric and the hyperbole to get, foreign leaders to do his bidding or to, make a change in their behavior or change what they're doing. And it appears he wants to use tariffs for this. And this began to drive the dollar higher as individuals began to say, well, it looks like President Trump is going to come in and really create an economic mess. This was kind of the idea. And in fact, as I was preparing my own 2025 market outlook, I read through many of the outlooks and the forecasts put out by the big banks just to kind of see what Wall Street was saying. I was pretty surprised to see many of them really taking Trump's candidate Trump's rhetoric seriously, and then kind of extrapolating it into what it means for the market into 2025. And I was a little surprised by that, because I think it's a little surprising to me that professionals would take candidate Trump's words seriously and then actually base their whole economic forecast on what he had said he might do. I thought that was a little strange, because my experience from the first Trump administration was that he would use these kinds of threats, but he would rarely follow through on them. And so to price in all of the things that he has threatened to do seems a little bit irresponsible, because we know that's not really how it works. As I've long told you for so long on this broadcast, you should not listen to politicians' words. I mean, they are just, they're just worthless. What you have to focus on is what they do, their actions. And what have we seen since the election? What have we been seeing in recent weeks? Well, we've already seen a couple of things. Number one, we've heard that President Trump is looking to ease some of the tariffs that he was planning on implementing, right? And then secondly, we've also heard that President Trump wants to see the end of the debt ceiling. He wants to get rid of the debt ceiling. Now, when you think about that, that is actually not in any way, shape, or form bullish for the U.S. dollar, right? If he's not really planning on implementing the tariffs in such an extreme fashion as the big Wall Street banks seem to think that he is, and also if he is wanting to end the debt ceiling, that is, that he wants to get rid of the cap on federal spending on an annual basis. I mean, there's no universe, there's no galaxy where that is bullish for the underlying currency, right? It's the exact opposite. He wants to drive up debt, and he wants to maybe pull back on the tariff talk. The other thing you got to keep in mind too is that, and I was telling our students about this during this week, was the fact that if you remember at all President Trump's first term, he was very focused upon the markets and the economy, and he wanted the perception of the economy and the markets to be positive during his tenure. And even when we did have market drawdowns, or there would be some economic pain, you would often see the Trump administration do what was required to get the market back into a positive place. And so my point is that I've heard from commentators and from some of these outlooks I've read that Trump is intent upon ramming through his ideas come hell or high water, no matter what it means for the economy. And I think that is short-sighted, just being honest. I think that it would be incorrect to assume that a second Trump presidency is going to be a bull in a china shop, risking the economy and dragging down the stock market. If we have learned anything from President Trump, it's that A, he loves to use debt to pay for things. B, he's an incredibly good president for the price of gold, right? So gold was going up like crazy underneath President Trump, practically doubled. And when we think about that, we say, well, now this is not a president who is going to destroy the economy to own the libs, right? Or to hurt the market to own China, right? So in other words, that's not really what we should be inferring from this, but that at least seems to be the takeaway that we're seeing from the broader economic world. And so I personally am not viewing the dollar as being an area that's going to go much higher in 2024 or 2025. In fact, you can even go back and look at what happened to the dollar in Trump's first term. The dollar ran up just like it did now. It ran up right into his inauguration back in 2016, 2017. But then as soon as he got into office and the fear subsided because, he's not going to do all these things that we thought was going to destroy the economy, then the dollar began to go down, especially when it became clear that he wanted to use debt to pay for stuff, right? So my point is that we think that the U.S. dollar is going to drop between 5 and 10% this year for a whole variety of reasons, as I've already mentioned. We're continuing to see a reduced global reliance upon the dollar. We see the Fed cutting rates. That's bearish for the U.S. dollar. We still have massive trade deficits and whatnot, importing far more than we export. Those trade imbalances also weaken demand for the dollar on a global scale. And so what does it all mean for investors? Well, a weaker dollar is what we expect, and that typically benefits what? That benefits commodities like gold and silver, right? It makes them cheaper for foreign buyers. It also tends to boost emerging markets as their debt burden becomes more manageable. And so, but it also boosts pretty much anything denominated in U.S. dollars. So when the dollar goes down, you'll see the stock market get support. It's like a tailwind for equity prices. And so we have seen rising yields over the last few months. We've seen rising U.S. dollar. We're of the opinion that that is about to change. We think in Q1, we're going to see the feverish rally in the dollar, which has gone from a 100 on the U.S. dollar index to about 109 as I speak. That 9% rally that we've seen since September is going to break, and we're going to see it begin to decline. And that's, quite frankly, if you hold gold or silver, or if you hold stocks or other assets, high-quality assets, as the dollar kind of comes back down to a more neutral place, then that's going to benefit those who are investing in those types of assets. So the first economic point we should make is that we expect and anticipate a decline in the U.S. dollar by 5 to 10% this year, which would be different from last year's 5 or 6% rally that it enjoyed. Now, let's shift gears and talk about the second economic theme that we see this year. And there's actually 6, by the way. As I mentioned, we did a 45-minute video and a PDF for our members. I'm just sharing with you a little, kind of giving you a sneak peek of some of the things we talked about. The second theme that I want to unveil here before we move into the investment themes is we expect the continued rise of generative AI and the move towards AI agents. We are expecting the software side, the hardware side really enjoyed a big rally in 2024. NVIDIA was the poster child of AI hardware as it's building out these AI factories. We are long NVIDIA. We've been long NVIDIA now for a few years, really built a nice position in NVIDIA back in 2022 whenever the sky was falling. And we've seen, of course, an incredible rally in NVIDIA since that time. NVIDIA is not the only winner here. There's lots of companies that we think are going to benefit in 2025, particularly the software firms, the AI agents. As I continue to talk about here, this is a big deal. This is where we begin to see the applications. ChatGPT, many of you are already using, it is the killer AI app, right? It is the one that caught everybody's attention. But it's not the only app, right? And it's going to, we're going to see a plethora of new AI-powered products and services unveiled by various companies over the next several years. Probably the next 3 to 5 years is simply going to be incredible. And at the beginning of 2024, we had put into our economic outlook that we expected AI to really dominate the year. And sure enough, I mean, it really did. And we're still in the very early innings of this technological revolution. We have generative AI that's powered by advancements in machine learning. That's changing the game across industries. And then think about productivity. I mean, AI is automating these very repetitive tasks and freeing up, human capital for more important activities. Like in healthcare, it's revolutionizing diagnostics, drug discovery, patient care, even surgery. If you look at the entertainment world, AI is literally destroying entire categories of job titles, right? I mean, it's transforming how content is created, from personalized streaming recommendations to all the way to fully AI-generated music and film scripts. I mean, this is just the tip of the iceberg. And for investors, this explosion of AI means that sectors like technology, healthcare, and consumer discretionary, and many others are likely to see significant tailwinds over the next several years. So companies that are embracing AI are going to improve their efficiency. They're going to obviously innovate, and they're going to emerge as leaders in this new AI economy that we're seeing built. But it's not just the big names. Obviously, NVIDIA is one that we own, we like for the long term, but there's some smaller names that are innovating within the AI space that also offer some tremendous opportunities. And we're going to be talking about much of that over the next several weeks as we kind of dig deeper into this economic forecast and market outlook. So there you have it. Two major economic themes that I believe are going to shape the investment landscape in 2025. A weaker U.S. dollar, which will give us relief along with easing yields as the Fed continues to drive down the federal funds rate in 2025. And that's going to benefit commodities. It's going to benefit equities in general. And then the unstoppable rise of artificial intelligence, which continues to transform industries and redefine how we work, how we play, how we invest, how we do business, how we produce, how we consume. I mean, it's just going to affect literally everything, right? So understanding these trends, I think, is very important as we head into the new year for you to be just kind of keeping your eyes on those things. The financial world is constantly evolving, and staying informed is half the battle. But we have all of the economic forecast available for our members on our website. We just released that on the website, followthemoney.com. We're going to take a quick break, and when we return, I'm going to share 3 investment themes that I believe have the potential to lead the way in 2025. I think you'll want to stick around for this. Don't go anywhere. There's a lot more to come.
Welcome back to Follow the Money Weekly. And here's Jerry Robinson.
All right, friends, welcome back to the program. Now that we have covered 2 key economic themes for 2025, let's shift gears and talk about some exciting investment themes that I believe have the potential to outperform the broader market this year. And when I say the broader market here in the U.S., I'm referring to the S&P 500 index, which is really the market to beat. And, when we look at the 2025 outlook, we have about 9 different investment themes that we expect to do well. And what I want to do in this brief segment is I want to share 3 of those with you. You can get all 9, of course, in our market outlook that we have available for our members. But let's just dive into 3 of the 9 investment themes that I've outlined in our market outlook for 2025. And the first theme is U.S. small caps. So I have been particularly optimistic on small cap stocks for the last year. In fact, in 2024, I did expect small cap stocks to outperform. And the reason why was because I had anticipated that we were going to see interest rates come down when the Fed cut rates. What an amazing thought, huh? The fact that the Fed would cut rates and then rates would go down. But in fact, that's not what happened, was it? In fact, it was the opposite. The Fed cut rates and we began to see rates go up and the dollar go up, which is, again, very counterintuitive, but again, largely due to the expectations of what a Trump presidency means, the second term. And so therefore, I remain optimistic on small cap stocks in 2025. And in 2024, the Russell 2000, which tracks U.S. small cap stocks, delivered about, a 10% gain. It wasn't terrible, but at the same time, it didn't outperform the S&P as I had hoped. The S&P delivering a total return of about 25%. But I am particularly optimistic about small cap stocks in 2025, and here's why. You have interest rates, I believe, are going to be heading lower in 2025. Smaller companies, especially those that are, small cap companies that meet that criteria, they are often more sensitive to borrowing costs, and they should benefit from cheaper access to capital as interest rates come down. That's what I was anticipating in 2024. And we did have a nice breakout in the Russell 2000 to a record high last year, but it just failed to continue because that rally got contained by the rising dollar, the elevated yields, and just kind of hemmed it in. So with the expectation of cheaper access to capital in 2025, I am increasingly bullish on U.S. small caps. Now, small caps are not an area that I invest in or focus on that often. It's not an area that I would just want to buy and hold forever. They've really underperformed large caps for a long time. The expectation of them outperforming here is really kind of a situational thing. It's as interest rates come down, it's going to give a lift, I think, to many of these smaller companies. Some of them have been really beaten down. And then, of course, you add to that, those lower rates, a renewed sense of optimism in domestic growth, right? And with deregulations probably coming from the incoming administration. And you've got a recipe for a strong rally in small caps, I think. The U.S. economy, we expect to continue to stabilize in 2025. We expect a 2.5% average GDP growth rate in 2025, which is not great, but at the same time, it's decent and it's stable. And, investors are starting to rediscover some of these often overlooked companies now as we head into the new year. And if you're looking for a way to play this trend, we've suggested a few different ETFs. My favorite for trading this space or being invested in the space would be the Schwab US Small Cap ETF. That's ticker symbol SCHA. But there's two other ETFs that are worthy of consideration, in my opinion. The iShares Russell 2000 Growth ETF, that's IWO, and also the Pacer Small Cap Cash Cows ETF, ticker symbol CALF. All of those are on my radar this year as we look for a diversified way to capture the small cap sector. So this is an area that we are watching in 2025, and we do expect small caps, Russell 2000, to outperform the S&P 500 because of the factors we've laid out. So that's the first theme I want to tell you about today is U.S. small caps. Let's see how they perform this year. I think we're going to have a winner on our hands. The second theme is one that continues to grab headlines, and it's another recurring theme that we had last year, and that is cryptocurrency. Cryptocurrencies like Bitcoin and Ethereum are really entering the mainstream. They really entered the mainstream last year with the advent of the ETFs, the spot ETFs. And we've seen institutional adoption. The spot Bitcoin ETFs were the fastest growing, most successful ETFs in U.S. history. We've never seen anything like it. We've never seen accumulation of fund flows were just incredible. So there's a lot of pent up demand for access to cryptocurrencies, these digital assets that are getting a lot of people's attention. Of course, we've been talking about cryptocurrencies on this broadcast for a long time. Many of you remember we were talking about Bitcoin over a decade ago, Ethereum many, many years ago. It's a theme we've talked about for a long time, but it's really beginning to tap into the mainstream. It's really beginning to enter mainstream, and Wall Street certainly is now joining the party. So we have this crypto adoption. At the institutional level, it's accelerating. You got favorable policy shifts on the horizon under this new administration, which the Trump administration is the first pro-crypto presidency ever. Now, we'll see how things turn out, right? He has said that he's going to be pro-crypto. Trump has. His administration is getting filled with pro-crypto folks. The SEC chair that he is talking about appointing is also pro-crypto. They're talking about moving cryptocurrency from the oversight of the SEC to the CFTC, quite frankly, where I think it belongs. And so all of those factors are shaping up to give cryptocurrency a great year in 2025. And let's not forget that we're in the post-halving period, the era where we are in that year, you're entering year 4 of the 4-year cycle, where we tend to get our peak. Now, in 2025, my expectation for Bitcoin, the price target I have on it, is $275,000, which really only represents about a 100 to 150% gain from where we are now, somewhere, 150% or so. I mean, we're at 100,000 right now. So, it wouldn't take too much to get us to 275,000 from here, even though that number sounds so large. And we're not really seeing the momentum slow. We saw Bitcoin hit the 100,000 level for the first time in 2024, and then we got back to it again this month. That, of course, was a historic milestone. And we've seen the growth of ETFs, like I had mentioned, the Fidelity Bitcoin ETF, FBTC, which I think is one way to play Bitcoin this year, or the ProShares Bitcoin Strategy ETF, BITO. It was the best performing ETF in our ETF leaderboard last year. And these make crypto investing so much more accessible to folks who feel uncomfortable buying the actual underlying cryptocurrency. Now, I personally think that's the best way to invest in the space. I am long Bitcoin and Ethereum and many other cryptocurrencies. I like to own them. So I'm not a huge fan of using ETFs to get exposure to the space. However, for some folks, it would make sense. So if you're bullish on the space, I would personally be focusing on adding core assets like Bitcoin itself, Ethereum, keeping it in a hardware wallet, keeping it offline. So you keep it safe from hackers. And I think this year, by the way, 2025 is going to be a big year for scams in the crypto space. So be advised, right? We tend to see this in the 4th year of every one of these cycles. So be aware. There'll be scams galore, very, very likely, in 2025. But you can also use ETFs, and some of the ETFs that folks use, like I mentioned, would be the spot Bitcoin ETF put out by Fidelity or BlackRock. One of those would be a one way to do it. I own just a few shares of the iShares BlackRock spot Bitcoin ETF. I bought that when it first came out just to see how it worked, just to make sure that just wanted to test it out. I knew our members and students were using them, and so I just bought a little bit to see how they work, and they seem to be fine. They seem to deliver pretty close dollar for dollar returns of the underlying. That's the benefit of having a spot Bitcoin ETF, which was fought for so hard by the industry. But so we do expect crypto assets to have another great banner year. In fact, we think this is going to be one of the biggest years, of course, of this 4-year cycle. We think it'll be bigger than last year. We think we'll see more spread out gains. Bitcoin, of course, dominated this year, but last year, but we think this year is going to be more of Ethereum, Solana. Some of these others, I think, are going to have a really good run in 2025. So the second investment theme we are bullish on and expect to outperform the broader market will be crypto assets, specifically Bitcoin and Ethereum and some of the top 10 coins. Now, finally, let's talk about the third and final investment theme. Remember, we list 9 of these in our updated 2025 market outlook, but we're sharing 3 with you on this broadcast today. And the third one is our proprietary Smart Score 11 strategy. This is one of our most powerful strategies that we offer here at followthemoney.com. We launched it back in 2022, and this is a model portfolio strategy. And it was a standout performer in 2024. It delivered 69.5% return compared to the S&P's 25% return, total return. So what's the Smart Score 11? What is that? Well, it is a members only service that's powered by our Smart Score ranking system, which you've probably heard about, where we use a proprietary model to be able to rank stocks. And what we do is we take the top ranked stock from each of the 11 S&P 500 sectors, which is why it's called the Smart Score 11, and then we put those into a model strategy. And what we do is we are basically adjusting that, rebalancing it on a quarterly basis. Every quarter, we check the Smart Score 11 to ensure that it currently or regularly reflects the top ranked Smart Score stock from each sector. The S&P 500 is composed of 11 sectors. You got tech, you got consumer staples, you got healthcare, you got industrials. Well, the S&P just composed of all of the stocks from all of those industries. So it's got like 500 stocks or so. But in the Smart Score 11, we track the S&P 500 in terms of the 11 sectors. We pick 11 stocks, but we only choose one from each of the sectors, right? So what we do is we will draw one stock, the top ranked stock based upon our Smart Score system, and we will let that basically represent the entire sector for the S&P. And so far, so good. We have actually seen some really good performance from the Smart Score 11 since the inception. When we launched this in January of 2022, this is coming up now on our fourth year, I guess, all 2022, 23, 24. This is our fourth year. But since the inception in January of 2022, the S&P 500 has gone up 31%, while our Smart Score 11 strategy has gone up 87%. So nearly tripling the S&P 500 since our inception. We nearly tripled it last year in terms of total returns. But the Smart Score 11, again, is probably one of our most popular services because folks like to see what are the top ranked stocks, and every quarter we'll update them. And we just did the update for Q1 2025, and we updated 2 of the holdings. Many of the holdings that we have in this Smart Score 11 don't change because the companies are that good and they just stay on top. That's been the case with our financial stock. It has been there since Q3 of 2022. We haven't changed it. Our tech stock has been there since Q3 2023. We just simply haven't changed it. Some of them are new though. Like we just updated the utility stock. It was NextEra Energy, and now we've moved on to a new stock for the new quarter. We also just updated our real estate stock. It was American Tower, AMT, but now we've changed it to a new stock in the real estate space. So those are the 2 new ones we've added. But anyway, 11 stocks, very cool strategy. It's data-driven. It's a disciplined approach that identifies the top stocks in each of the 11 sectors and helps our members beat the market if they choose to use it as in their research. So in 2025, we expect this strategy to continue delivering strong results by staying ahead of the market. And by the way, if you want to learn more about the Smart Score 11, you can go to followthemoney.com/SmartScore11. No spaces, no dashes or anything. And by the way, all of our members, our gold and platinum members can log in and see that service and see the current holdings for Q1 2025. We just recently emailed our folks about the update as well. You can also, if you're not currently a member, you can go to that page and you can learn more about the system, how it works, and why it's been so successful. Now, these are just 3 of the 9 investment themes that I've outlined in my full 2025 market outlook. And for premium members, the full report dives deeper into additional themes. There's 6 more investment themes that we expect to do well in 2025. And we share that in this report. It's a 45-minute video. It's a PDF download as well. So if you're not already a member, now is the perfect time to join and gain access to these insights and more. So I hope you'll consider becoming a member today and joining us for a brand new year ahead. So let's take another short break, and when we return, I'll share some final thoughts with you and an inspiring quote to help you kickstart 2025 with purpose and focus. Stay tuned. friends, welcome back to the final moments of today's episode. And as we wrap up, let's take a moment to recap what we've covered. We began by diving into two key economic themes for 2025. We talked about the anticipated decline of the US dollar by 5 to 10% and the continued rise of artificial intelligence impacting not just the technology sector, but many other sectors as well. Both of these trends, I believe, will shape the global economy and create new opportunities for those who are prepared. And then we explored three investment themes: U.S. small caps, the expanding adoption of cryptocurrencies, and our very own Smart Score 11 strategy, which had a stellar performance last year. These are exciting areas to watch in the year ahead, in our opinion. But none of this matters if we don't approach 2025 with the right mindset. Which brings me to today's final word, which was written by the great Stoic philosopher and teacher Epictetus, when he wrote, "No man is free who is not master of himself." You know, I've been reading through Epictetus's discourses here at the beginning of the year, and this quote has been rolling around in my mind as we enter 2025. It's a powerful reminder that freedom comes from self-mastery. Whether you're navigating the markets or your personal life, discipline and self-control are the foundation of success. And as we look at the opportunities before us in 2025, it's clear that achieving financial success will demand clear thinking, calculated risk-taking, and simply just staying focused on your long-term goals, which can be difficult in a noisy world like the kind we live in today. And for those of us who are grounded in our Christian faith, self-mastery is also a part of being a good steward of the resources and time that we have been given on this earth. So my challenge to you this year, 2025, is this: take control of your decisions, choose wisely, and remember that what you allow into your mind will shape your results. Don't let distractions or short-term noise pull you away from what matters. And that's just something to think about. Friends, I want to thank you for joining me today and for your continued support of the Follow the Money podcast and of our community online. If you're not already a member, I invite you to join us at followthemoney.com/join. You get exclusive insights, tools, resources, all kinds of ideas and education to help you succeed in 2025. And don't forget about our upcoming Swing Trading Simplified course launching later this month. It's designed to help you take your swing trading to the next level. If you're interested in that topic, you won't want to miss this very in-depth course. And remember, when you want the truth about the global economy, just follow the money. Have a safe and prosperous new year, and I'll look forward to seeing you right back here next time. Until then, God bless.
Contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.